In China, there have been incredible monetary measures, stimulus, central bank easing, relaxed lending standards, further control over industries and companies. Just like all other countries, intervention has been pushing ahead at full force for nearly a decade, and outside of equities, the governments have been unable to actually get the economy moving. Another failure. You came here for the truth, so let me unveil that for you. Today we're going to look at China, and I want to connect that in with various other indicators and issues. Let's begin. China industry drives its consumers. Well, what do we have here? You can see what has happened leading up from 99 up until the financial crisis time frame, and ever since then, there has been a slowing of the economy, and we could see that with retail sales. Number one, this is very important because domestic consumption has been this idea in China that we will have domestic consumption and we don't need to worry about all of these different countries purchasing from us. We're going to buy it all ourselves. But ultimately what we have seen here is that this has been slowly but surely fading away. Yes, it's still quite significant, but not to the level where it was during the financial crisis time frame. And when you look at industrial production, you're seeing it's down and so on. Now, this is a problem that exists in China, but of course, look at the global economy. It is suffering in general. So of course, China being an exporter, major exporter, that they are unable to find more buyers. So they struggle with that. And ultimately, this is the problem around the world. It's not necessarily just China has this problem. The global economy is suffering right now. If you extract equity prices from the equation, you get an entirely different picture. Nobody wants to necessarily look at that because they want to be naysayers and they want to not have negative things to look at, but just take it for what it is. If we look at all the indicators, let's say there was a total of, I don't know, let's say 5,000 major indicators out there. And if you just extract equity prices from that equation, you start to get a real sense of what's happening. Most people, other than you good people who listen here every day, they don't want to hear that noise because it's something that would affect their portfolios. Suddenly, I don't want to hear that. I don't want to look at that. Well, China's fixed asset investment, and you can see this right here, that over the years, this has been declining as well. Back to the levels not seen since 1999. 18th Party Congress said growth is temporarily delayed and the stimulus will keep us going until then. The 19th Party Congress, there is no growth. China's rejuvenation is really about dealing with this reality. No matter what, all of the stimulus measures, yes, they can keep the stock markets going. Absolutely, there's no issue with that because you just devalue the currency. It's so easy to do. Venezuela's doing it right now. But can you get the actual economy moving by printing money? And the answer is unequivocally no. You cannot move an economy by printing money. It has absolutely no effect. What you can do to get the economy going is engage in public works. Public works, build some buildings, build some bridges, have some roads and some other things going and get people working, get it moving. Those people who are employed, they will buy stuff, they will buy food, they will spend money. That's better. But ultimately, if you would simply allow people, allow businesses to do good things out there and not try to restrict and control every single industry and regulate all of those things that should be open and should be available to people, then you have a big problem on your hands. You have a hard time. You simply slow the growth. But instead what you do is you deregulate all of those industries that only that very few will be able to profit from and only be able to control, and that affects everyone down below it. And this is a very big problem. Has no bearing on China specifically, but that's what they're doing. Their lending standards are being relaxed. Why? This is not a time for that. This is when you should be constricting on certain issues that would make the next crisis happen. And you should be able to balance that. And that's called a real soft landing. What they say, what they're doing with the soft landing, that's never the case. They are never doing that. They say they're doing it and they use their forward guidance policies in the central banks, but that's not what they're doing. They never have a soft landing. It doesn't work like that. All right, now the PBOC balance sheet, guess what? It's been increasing. Does that surprise anybody? Take a look at the green line here. You'll see for yourself, but it's not rising at a rate that's fast enough to keep everything going. And I would suggest to everybody else that what we can see is that central bank monetary easing has no effect on the actual economy whatsoever. It's just the way that I see it here. By the way, I think I highlighted the wrong line. This here is the RMB assets, and your liabilities deposits or of other depository corps here is what is increasing as well. Doesn't matter what you want to see. All I know is that the central bank continues to print more money. That continues to rise, and the general economy is not rising at anywhere near the rate of their monetary stimulus measures, and they'll just keep doing it because they don't know any other way. Now, switching gears here, I want to look at this. One of the problems that economists have is that they are unable to define anything until it is back into the pages of history. And one of those things is recessions, and they are unable to define when a recession comes until it's far later into it. We're already 6 months, we're already practically a year into it, and then they will say, oh yeah, by the way, you know, that past 6 months, yeah, that was a recession, we're in it today. This shows you right here in the bottom right corner. You can see the different, economic peaks. It shows you when the recession was dated and the monthly lag that was, in relation to that. And you'll see here that whether it's 5 months or 12 months, they're always way, way behind. They're always way too slow on their interest rate policies. They're always way too slow on reacting with their monetary stimulus. They're never acting according to reality. Why? Because they're always having these silly meetings. They do the same thing that corporations do, wasting time, wasting money, and not worried about actual fundamental productivity. Fail constantly. Cumulative growth in population 16 and over versus employment, January 2009 to present. So we're basically looking at the bottom up until today in the S&P, and you'll see here that despite the fact that the employment has been growing, that's a fact, it's not growing at the same rate of the population. So what you may have is, let's say jobs numbers come out and you say, oh wow, 100,000 new jobs were created. But at the same time, the population has increased at a rate that's far greater than the employment. So as time goes on over, let's say since the bottom of the recession and where it's been till today, yes, employment may have increased total number of jobs, but there's a missing millions, as they show you on the right-hand side, and that's not being factored in. Gap between real disposable income and the cost of living. Where you have a problem is the average individual working their 9 to 5. Every year, if they're lucky, they can get that 2 or 3% raise, if they're lucky, of course, right? So they get that raise, but the cost of living is going up far higher than that, whether it's something like gasoline, whether it's your energy prices at home, electricity, whether it's your food prices, rent prices, mortgage prices, doesn't matter. Look around. In general, people spend more today than they did 20 years ago, 30 years ago, 40 years ago, and so on. And why? Why is that the case? Well, unfortunately, there's a devaluation of the currencies, and that is the fault of central banks. They are completely at fault for that, and we know that, and they actually have commented on that many times. They know that inflation erodes the amount of debt that they have, and so it is in the interest of the government to create inflation. That's a paraphrase of Ben Bernanke. 2007 to 2016 mean net worth change by family's income. Guess what? The people at the very top, they make all the money, they are able to have all the control, and they are making more money than ever before. Looking at that top group, let's call it the top 20%, they're doing well, okay? In that, not necessarily the top 10%, but that second bracket of the 80 to 90%. They're going to be doing better. They're going to continue to do better as time goes on. The disparity in between the rich and the poor only gets worse, and that is because of central banking. We're not able to diagnose why that is in the mainstream media, and the average person, they don't realize that. They just point the finger. You're bad, you're bad, you're good, you're bad. That's not how it works. We have to look at the central banking, the actual system itself. But people don't even know what a central bank is. And that's part of the problem. That's why I, made it very clear in my first book, talking about the central banks, talking about the introduction, how the money works and how money began and everything. And I did little diagrams, making it all easy for people. This here, Apple, you're looking at, to say it's a massive company is an understatement, but they're getting into this autonomous vehicles. Not the only company. In fact, they're far behind. Yes, they keep hitting people, and yes, they keep getting into accidents, but let's just legalize them. Let's just put them on the road. It's all good. We don't need to put them on the tracks for their safety at all. We just put them directly on the road so they can hit people on their bicycles and stuff. That's great. Autonomous vehicles will be replacing jobs in the industries like taxi drivers, like bus drivers, whether it's pizza delivery people, so on. It's going to be replaced by some sort of automated service, okay? Whether that's a little drone or whether that's some sort of vehicle like this, that's going to happen. They're already doing so on limited routes in airport areas where it would just travel along a very specific path. They can do that right now, today. But this is going out into the real world, and ultimately it's just going to be a fact how this will all unfold as time goes on. Look for this to create a new set of jobs. All of this automation, all of these engineers, they're getting new jobs. That's great. Great news in that respect. However, a lot of people, like a total number of jobs, I think will decline. And the engineers, of course, are in the upper 20% of income. They're going to be doing better. Those working the taxi cabs and driving the buses and things may not be doing so well. So that's all for this video. If you found it informative, then please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that very much. Now, if you found the video informative, I know that you will find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, there's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.